Hey guys, if you clicked on this video, chances are you are a business owner or an entrepreneur who worked the whole career building a business. You built something from scratch and now you're wondering, what is the value of all my hard work that I've done over the decades? And is this value even transferable? In specific, what is the value of my business if I were to sell it to you? What would someone actually pay you to buy your business so you can someday cash out for all the hard work that you have done so you can enjoy your retirement doing the hobbies you love, or possibly traveling all around the world, or even starting a new venture? And if that is you, this video is going to help you. Now let me tell you why. The value of your business is a very important number that every business owner should know. And the reason is, in many places around the world, business owners don't have any sort of pension or retirement plan. And many of them count on their business to support their way of life when it is time to take a step back and enjoy the golden years. So your business value makes the difference between enjoying your golden years in the golf course or working another job during retirement. Now let me quickly introduce myself. My name is Anish. I'm a business owner and I talk a lot about entrepreneurship. And my aim with this channel is to provide you a no fluff, no nonsense tip to help people find financial freedom through entrepreneurship. Now, coming back to business valuation, while this number is so important, I've come across many business owners who have no idea what their business is actually worth. Well, there are so many different ways to value a business. I'm going to explain you what earnings multiplier is. And we commonly use an average of 2 years of your EBITDA to understand the value of your business. So at least 2 years. Some people use 3, but let's just go with 2, okay? So with EBITDA, that is like this. And EBITDA is pretty much your earnings plus interest plus taxes plus depreciation and amortization. There's one more thing that we can add on, and that's called add backs. Add back is an expense that your company pays that would not be passed on to a new buyer. So say for example, your home office rent. That's something that comes to you indirectly, but your business is paying for. So that amount, that expense would not be passed on to the buyer. And another example I can give is a training expenses for yourself to be a better leader, or a retreat that a company pays for. But that would not be passed on to a new buyer. Okay, so that's expenses that which another buyer would not incur. That's only specific with you owning the business. Okay, so pretty much EBITDA is your earnings, interest, taxes, depreciation, amortization, and your add backs. Okay, let's use a simple example. Say for Bob the landscaper, to get an idea how this business valuation is done. Okay, so Bob has an average earning for 2 years of, say, hypothetically 200,000. He's making 200,000 a year on an average for the past 2 years as net profit. And then he has hypothetically $10,000 of interest that he pays towards all his equipments and truck and whatnot. Okay. And then he's paying a corporate income tax of another $10,000. Okay. Depreciation for all his assets that he's using. Let's just say he's paying an depreciation of $50,000. He's having amortization of $10,000. And Bob, the landscaper, had a retreat, or he had a training expense of $10,000 for his leadership training to be a better manager, which the new business owner or the new buyer does not need. He probably thinks he's a better manager himself. He's having a $10,000 training. Okay. And we're going to get $300,000. So Bob, the landscaper, has an EBITDA, an average EBITDA for past 2 years of $300,000. Okay, so this is the starting point. First, we find out the EBITDA of it. Now, the second metrics that we use under the earnings multiplier is we find out the EBITDA, number one. Number two, we find out a multiplier. Okay, so if you look here, One is the earnings, another one is the multiplier. So it's this two-step process. Okay. Multiplier is something that you do not calculate yourself. It doesn't come from your balance sheet. It doesn't come from your profit or loss statement. Multiplier is something based on the attractiveness of your industry. Okay. Multiplier simply means how many years of earnings or EBITDA will it take to pay off the value of your business. This depends on a lot of different factors, like the industry that your business operates, the growth potential, the competitiveness in the space, and the company itself. Like, how good is your brand? What's the quality of your revenue? How many contracts do you have? How many government contracts, and how much of your business is B2B versus how many of business is B2C? These all makes a difference when it comes to multiplier. But let's just say, for simplicity's sake, the multipliers that I normally see for everyday business is between 2 to 5. So your typical everyday businesses, like your heating, plumbing company, and all those businesses sell anywhere from 2 to 5 multiplier. And a commonly used number that we see is 3. Okay? So your everyday businesses can go anywhere from 2 to 5, and they're going to use a multiplier of 3. This multiplier 3 is based on a lot of factors too. Your business should be positioned to sell. You need to have clean books. You need to have a clear SOP. So there's a lot of factors to achieve this 3 multiplier. And when it comes to multiplier, it depends from business to business. Okay. We have seen software businesses, go anywhere from 5 to 11 multiplier, because these are high growth industries. They can scale with less overhead. So that's the reason that these businesses have a better multiplier. So Bob's landscaping company goes for a multiplier of 3. Okay. So what we would do is we would just take 300,000 times it by 3. So we would do 305,000 times it by 3, and then we get the value of Bob's business, which is $900,000. So Bob's business is valued at $900,000. Pretty good, right? But there's definitely more. Buyers look into a lot of different things when it comes to buying a business. It's like matchmaking. They look at how systemized is the business, what is the brand value of the business, and is this business dependent on the owner itself? Can they take a vacation if they were to buy this business? Do you have clear SOP? Do you have a clear document to outline the culture of your business? Is your revenue dependent on a few clients? And most importantly, is your revenue increasing or decreasing? And there's a lot of things that buyers look for. And to the most part, it's always a good idea to stay in touch with someone who understands what buyers are looking for. But to the most part, if you're a profitable company, got good people, good systems, recurring revenue, and the business can run without you, you got some value in your business. Now, let's talk about the mistake I see business owners make all the time. I want to give this information to you so that way you don't make those mistakes. Okay? I see business owners do this all the time that destroys the value of the business. We need to understand that the enterprise value of a business is a very sensitive number, and this value needs to be preserved the right way. Let me give you a few tips that will help you realize the value of this business. Number 1 tip, plan early. When you're looking to sell your business someday, you want to start early. Make sure to give yourself 2 to 3 years time for the sale to complete. Most business owners think about selling their business when they're tired, they're burned out, or even have a health crisis. That's when buyers see weakness. Preparing early will not only help you have an upper hand in the deal, but it'll also help you find the right buyer for your company that suits the culture that you build and gets along with your employee and continue your legacy. Number 2, business owners try to sell their business themselves. I have seen it many times. Business owners try to sell their business over various platforms like Facebook Marketplace, KGG, Craigslist. This is almost always a bad idea. I mean, selling your business is very different than selling a used car. Selling a business involves a lot of different assets: real estate, equipments, trucks, employee contracts, severance paid, legal stuff. A lot of things are involved in selling a business. Selling a business is very different than selling something on Facebook or KGG. Selling a business is a process, and this can take a few months to a few years. So you need a professional on your team. Number 3, business owners take it too personal. I get it. Selling a business is an emotional decision. Even the thought process of selling this business can be tough. But we need to understand, For a buyer, this is a start of their journey. They have invested their hard-earned money into buying this business, and all that they care about is return on investment. That is the ROI. They want a business that they can build further, that can be attached to a particular cause, a great brand that they can stand by, while having a profitable return on investment after paying the cost of financing for your business. So whenever you decide to make that big move to sell your business and move to the next stage of your life, you need to be prepared. You need to have the right people on your side who can guide you through this process. If you're curious on what your business is actually worth, I made a simple calculator to do all this. Somewhere in the link below, you should be able to access that calculator. You can just plug in the numbers from your profit and loss statement, and it gives you a rough estimate on what your business is worth. It takes about 5 minutes. And if you're confused, you have a situation that you don't know what to do, and you want to talk to someone, give me a call. We can walk you through the numbers and make sure that you get this value correct. Now, on a closer note, know your number, understand your options, and build something that can take care of you the way you took care of it. If this helped at all, follow along and share with another business owner. Every business owner deserves to know what their hard work is really worth. And if you're still around and curious on how you can sell your business for the most value possible, I do have a pre-recorded webinar. You should have access to that link somewhere in the description. It's a free training where I explain business owners on how they can get the most value by selling their business. I hope that was helpful. I'll see you in the next one.